Hello, folks. I am speaking to you on behalf of the church or charitable organization making this video available to you. In it, I will show you how to discover giving capabilities that you may not be aware of. In fact, some of them are win-win because they benefit the ministries you support and you personally. And the benefit to me is that I have the joy of being able to give this video free to your church, school, or ministry that you already are supporting. In this video, I will take you beyond basic wills and living trusts and introduce you to some advanced estate and gift planning strategies that I like to call win-win estate gift planning strategies. These creative and advanced strategies can help you discover additional resources for increased giving to your church or Christian ministry. They can save you capital gain taxes, income taxes, and estate taxes. They can even increase your personal income. And certainly, they can increase your joy in being a better steward and giver of God's resources. Because this can be a complex subject, my purpose is to only give you a basic introduction to some of these strategies and hopefully motivate you to seek more information and help if at the end you think they might apply to you. It can be technical, and at first it's a lot to absorb, but don't let that overwhelm you. You can view this video several times and you'll have an opportunity later to personally receive technical and professional guidance. So hang in there. Let's start with a simple plan giving strategy, a bequest in a will or living trust. It can be a fixed dollar amount or a percentage of your estate at the time of death. It reduces the size of your estate for possible estate taxes. It is flexible, meaning you can change your mind, which is different than an irrevocable charitable gift. Next, let's talk about giving strategies for different assets, starting with cash. It is the most common and simple source for donations. It can be a current or deferred gift, such as a bequest. It can be used for most plan giving strategies, and it provides a tax deduction of up to 60% of adjusted gross income. We call that the AGI. The next one is gifts of appreciated property that might have a capital gain tax problem. Rather than sell it and then gift the net proceeds, you gift it first or part of it, resulting in avoiding capital gain tax, receiving a charitable deduction on the full value of the property gifted, and receiving a tax deduction of up to 30% of adjusted gross income. And you can potentially carry forward the tax deduction for up to 5 additional years. Here's a simple example of gifting an appreciated asset first rather than selling it first. Don't worry about how the numbers were calculated. I'm just trying to demonstrate a point. Option 1, a person sells appreciated stock for $50,000 and then gifts the net proceeds of $37,000 after deducting the $13,000 capital gain tax. Option 2, this person gifts the stock at fair market value, resulting in a $50,000 gift to charity, no capital gain tax, and an $18,000 income tax deduction. The key is to gift it first and let the charity sell it with no capital gain tax. You can also make it a part sale, part gift arrangement in case you need some cash and you don't want to gift the whole asset. You can make gifts of business assets. It could be a building or rental properties. It can be company stock. It can also be a partial gift sale arrangement. You can give tangible properties such as artwork, jewelry, vehicles, or collectibles. The income tax deduction for these kinds of assets can vary depending on the charity's purpose and how they would utilize the item. And you can give from your retirement assets like an IRA or a 401k. And there are specific IRS rules that apply here. Because these assets have not been taxed yet, try to use them for your charitable giving plans first, rather than to your family where they would be taxed. Use your other non-taxable assets to give to your family. A real popular giving strategy for most types of assets is a donor-advised fund, or what we call a DAF. It's easy to set up with a charitable foundation. Let me give you a personal example. Some years ago, my wife and I received an inheritance from her mother that included some highly appreciated stocks with a lot of capital gain tax in them. When we tithed the inheritance, we transferred only those appreciated stocks into our new donor advised fund with the Christian Foundation of America. This allowed us to avoid the capital gain tax on those stocks when they were converted to cash for our subsequent charitable giving. Then, over about a year, we asked the foundation to make specific gifts from our DAF to multiple charitable ministries that we wanted to support. It was like a one-stop, flexible approach to giving, very handy. And we received all the tax benefits, plus any remaining proceeds of the gift while it's in the donor advised fund are growing tax-free. And if we so choose, it can also continue after our death with successor advisors such as a memorial legacy. I call it our win-win. Okay, now, as I get a little more technical here, I don't want you to worry because, as I mentioned before, you will be given an opportunity later to get personal answers and help if you are interested in pursuing any of these ideas. Moving along, let's say that you have some CDs or certificates of deposit invested at your bank or credit union. You like your security, but not their low income. How can you keep their security but start receiving more income? A possible answer is a charitable gift annuity. It's like a regular annuity, but this one is issued by a 501c3 nonprofit organization. You gift the asset to the charity or a foundation, and in return, they issue you an annuity income for life or a term of years. You also receive a partial income tax deduction. It can increase your income while keeping it secure, and at your death, you make a future gift to your favorite charity or charities. Again, win-win. The next strategy is the Charitable Remainder Trust, or what we call a CRT. Several years ago, I had an elderly couple who owned some highly appreciated Intel stock. They wanted to retire, they needed more income, but didn't want to sell any of it because of the humongous capital gain tax. They also wanted to make some generous gifts to their church and other charitable ministries. They decided to set up a CRT, or Charitable Remainder Trust, place the stock in the trust, which then sold the stock and invested in income-generating securities so that they ended up with more income, no capital gain tax, a substantial income tax deduction, and blessing their church and some ministries with a future gift when they pass away. Again, win-win. You can also design it as a gift sale combination. Another example of the benefits of a charitable remainder trust starts with a question. How do you turn dirt into an income stream? Let's say that years ago you acquired a piece of land for $15,000. You've been sitting on it and now it's worth $1 million. You need more income, which dirt doesn't provide, but you don't want to just sell it and pay the huge capital gain tax. And you also want to make a significant charitable donation. As with the Intel stock, you gift the land or a portion of it into a charitable remainder trust and receive increased income and tax benefits. The CRT trustee, which is usually a foundation, then sells the land with no tax consequences, invests the proceeds in income-generating assets, and starts sending you income checks. It eventually receives the remainder asset at your death. Then there is the Charitable Lead Trust, or CLT. It's sort of the opposite of a CRT. It works well for folks with high incomes who have a charitable intent and don't want to permanently give up the asset. It works as follows. You transfer a non-appreciated asset like income-producing real estate into a charitable lead trust. It generates an income stream for a designated charity or charities for a term of years, generating income tax savings for you. At the end of the term of years, the asset is returned to you, the donor, or your heirs. Okay, I realize that this is a lot to absorb, but hang in there. If you have questions or are interested in pursuing these ideas, let me suggest the following. Watch this video again as many times as you need. Read the handout provided you by the representative of the church or ministry introducing you to this video. Among other items, the handout will provide you a list of some Christian foundations who can meet with you and your advisors in person or via Zoom. Please keep in mind that not all foundations provide all the capabilities I've listed here. The handout will provide other helps and instructions. It also lists a do-it-yourself resource that allows you to go on your computer and calculate your own what-if scenarios if you're so inclined. And it is provided by the Christian Foundation of America on their webpage. And of course, they're listed on the handout. Eventually, you will need to contact one or more of the Christian foundations or other resources listed to schedule an appointment, and here you will receive answers to your questions, calculations, and guidance toward any action that you may feel led to take. Or you may have access to your own professional help in your location. Well, let's review. I introduced you to several estate gift planning strategies that can be a win-win for you and the charities you support. I encourage you to seek answers and help if you want to pursue possibilities. You will receive a handout that lists professional sources that can help you calculate the what-if scenarios to see if any of these strategies would work for you and fit your financial needs and goals. And if you do decide, they can help you make a planned gift and possibly manage it for you. Also, keep in mind that the tax laws can change over time, so that could affect your plans when you pursue one of these options. Finally, if you do make a planned gift, please don't forget to inform the church or ministry who will eventually benefit from your planned giving generosity. They will certainly appreciate it. I hope that this video has been helpful, informative, and motivational. May God bless and guide you in your effort to be a better manager and giver of His resources. Thank you.